Hello and welcome to Trends and Futures Position Update. My name is Gary Kamen. Today we're going to be covering the entire wheat complex. I want to apologize. Tuesday night and Wednesday I was not able to post any videos. I was at home. Chicago had the third largest blizzard on recorded history, and Comcast was out at my house. So I had no internet, no TV, no telephones. Thank God for cell phones. And my kids were home yesterday, so that was even more interesting. When they heard there was no TV and no internet, oh, that was not good. But they got to learn what board games were all about. Anyways, today Bernanke says faster job gains are needed to assure recovery. That's an interesting statement from him. Service industries in the U.S. expanded by the most since August 2005, indicating a broadening of the economic recovery. However, yesterday's headline that I read that kind of concerned me was that Visa profits rise on consumer spending surge. If you've heard me on these videos, a lot of reports show that consumer spending has been driving the economy. Well, if this is through credit card purchases, we don't want to see consumer debt increasing. Now, as I mentioned, we're going to be looking at the entire wheat complex. We're going to be looking at Chicago wheat, Kansas City wheat, and Minneapolis wheat. And there are differences in all three of those. We're going to take a look at those right now. And we're going to be looking at the March contract for each. Here's our March wheat contract. It's a daily chart. And as you can see, we went long on January 21st at 824.5. Our open trade equity as of close February 2nd, which was 863, is $1,925. Our end of trend number, 806.25, gives us a loss of $912.50. Second resistance is at 878.75. Second support is at 845.25, locking in $1,037.50. When we went long this market, charts look good. We had rising open interest. We had DI plus cross DI minus. We had ADX numbers coming out from below 20 and rising. Currently, ADX numbers are at 28, which gives us a strong uptrend. MACD is bullish with a crossover back in here when we got long Chicago wheat. And stochastics corrected from an oversold condition, and we're bullish also when we got long our wheat contract. So right now it's a good trade. We got some profits we're managing. But let's take a look what happened on the weekly chart when we recommended the long position. On a weekly chart, again, this is Chicago wheat. Here's the week we went long right in here. ADX numbers are very strong, showing a very strong uptrend. We did have a crossover of DI plus over DI minus. Again, this is a weekly chart, and stochastics were bullish and now are overbought. Not concerned about an overbought market, again, when the trend is so strong. Commitment of Traders report. This is the 4-line disaggregated report. It's the better report than the 3-line legacy report because it actually separates the true commercials from swap dealers. This is a market that you want to look at because swap dealers have been long this market in an extreme position for a while. As you can see up here, currently the swap dealers have a net long position of 174,100 contracts. Managed money are at 37,719, and true producers have a short of 195,073. You can see here, true commercial starts shorting, managed money starts buying, and swap dealers were already extremely long up here, over 200,000 net long. Market came up, kind of came into a range between 750 and 650 on a weekly chart. We see some more selling by true commercials, a little bit of buying by managed money, and the market starts going up again. So right now we do have support from the big elephants in the room for this market to continue to go up or show strength. We'll just see how high we go. Fundamentals in this market. We are questioning whether or not the extreme cold without snowfall in some of the wheat growing areas in the south, that could cause a problem for the wheat crop. We won't know that until spring. We still have issues with Australia and their wheat exports. A lot of their wheat crop was destroyed by floods. They say next year they'll have a very good wheat crop, but this year their wheat crop's not going to be so good, and they are the 4th largest wheat exporter in the world. So this is a trade that we're in. We're currently managing, I said, $1,925 in profits right now. Adjust your stops accordingly. You don't want to stick your stop out where our end of trend is. It's a loss. At least move your stop to break even, or you can look at the second support number to lock in some profits. Kansas City red wheat daily chart. We got long on December 3rd at 822. Our open trade equity as of February 2nd, yesterday's close, of 952.75 is $6,537.50. End of trend. We have a number of 912.75 where Trends and Futures will look to liquidate this trade. That's a profit of $4,537.50, giving back $2,000. Second support's at $929.25, locking in a profit of $5,362.50. Either one of these numbers will lock in some nice profits. If you want to give back $2,000 or $1,000, it's your choice. Back when we got into this trade, excellent chart presentation. Technically, DI plus crossed DI minus, ADX numbers were moving up, MACD crossed over. Not only did it cross over the signal line, it crossed over the histogram zero line, which is a good sign, and stochastics were bullish. Now looking at this trade, you'd have to deal with this little pullback and then catch this entire move all the way up. On a weekly chart, again, we want to look at both daily and weeklies before we get into trades to make sure the daily chart agrees with the weekly chart. December 2nd was this week in here. We had DI plus coming over 20. It never really crossed down below DI minus, so it never had to cross above it. But it came over 20. ADX number started coming up, which is a good sign. Currently, it's a very strong trending market up on a weekly chart. Again, same thing with the commercials. While this market's not as heavily traded as the Chicago wheat market, you still see true commercial selling, managed money buying, and here we go. Same period of time where we had this little range come up in this area here. But we still have support from managed money and true commercials. Managed money buying, true commercial selling. True commercials have a net short position of 82,466. Managed money has a net long of 49,202. Swap dealers are at 18,480, and they have come down some. Market's overbought. Back when we took this position, bullish, and we've been managing this trade ever since. It's a good trade we're in. These are the kind of trades you really want to get into. Our next trade is in Minneapolis Wheat. This is the wheat you and I eat. This is the Minneapolis Wheat is the wheat used to make bread in the United States. This is what's going to tell you how much your loaf of bread is going to cost in the grocery store. Right now, though, we went long as of December 2nd at 813 and a quarter. Our open trade equity as of February 2nd's close, which was at 1010 and a quarter, is $9,850. Our end of trend number of 958 locks in a profit of $7,237.50, and our second resistance is at 1028. Second support 980 locks in $8,337.50. Again, adjust your stops accordingly. Both of these areas are locking in some nice profits. We see increased open interest continuing in here, as well as when we took the long position right in here. Very good signal for us to go long. DI plus crossed DI minus back in here, but didn't cross the 20 line until back in here. And ADX numbers started going up, becoming very strong, and still they're very strong. They kind of came down a little bit. But again, a weakening ADX number does not mean a change of trend. It just means the current trend is weakening. Doesn't mean that you're going to be going short this market in like in here. It's just a weakening trend or a correction or profit taking. You got to be really careful and make sure you know what you're reading. Here's a MACD. Again, it's signaling us to go long this market. Crossover of the signal line. At the same time, it was crossing the zero line of the histogram. Very good signal. And we had the bullish view of stochastics. Again, all agreeing that we should take this position going long. And a weekly chart, very similar to the Kansas City wheat. Here's a week we got long the market. Again, signaling. Good signaling here with DI plus starting to come over 20. ADX numbers rising. Good time to go long the market. Stochastics became bullish here too. Here's how the whole market started out of this range right here. We have this breakout, and you see support of selling by the true commercials and buying from managed money. Currently, true commercials have a net short position of 21,753 contracts. Again, that's almost at an extreme here, like it was back here. And managed money is adding to their net longs. They're at 13,845. Again, not a heavily volume traded market like the Chicago wheat contract, but still a market you can trade. So you see how the system works that I'm showing you on using technical indicators to support the trade recommendations, trends, and futures issues. If it agrees, take the trade. If it doesn't agree, take a step back. Of course, managing your trades, we have the end of trend numbers from trends and futures. That's the end of the trend where trends and futures will liquidate. I give you second support numbers or second resistance numbers depending if we're long or short. So you could adjust your stops accordingly and gauge your profit and loss. So in summary, we see the wheat complex. Our open trade equity as of close last night, Wednesday, February 2nd. In Chicago wheat, our trade has got an open trade equity as of last night of $1,925. Second support's at $1,037.50. That'll lock that in. If you take the end of trend, we're going to lose $912.50. Again, raise your stop to break even, please. You don't want to take any winners and turn them into losers. Kansas City wheat, open trade equity as of last night, $6,537.50. Second support would lock in $5,362.50, and our end of trend would also lock in $4,537.50 if you chose to use that number. Minneapolis Wheat, it's the more profitable of all our trades. We have an open trade equity of $9,850 as of last night. Second support locks in $8,337.50. End of trend locks in $7,237.50. So adjust your stops accordingly. And as you can see, the totals of the entire wheat complex, we're currently managing $18,312.50 in open trade equity, half of that being in Minneapolis Wheat. Second support, $14,737.50 over here, and our end of trend locking in $10,862.50. So we're not looking to pick tops and bottoms. We're always going to give back something. What you want to do is make sure you place your stops accordingly so you lock in as much profit as possible and you put as much money in your pocket as possible, because none of this money out here that I'm showing you today is in your pocket. This is basically open trade equity. These are profits that have not been recognized as of right now. So until tonight, when Trends and Futures issues new trade recommendations, be well, trade well, and follow the trends.